Welcome back guys to another YouTube video. Now today's video I'm going to be talking about mainly risk management. Now this is episode 2 when I'm talking about risk management. So now we have money management and we have trade management. Today I'm going to be explaining more about trade management because a lot of traders have difficulty in trading, in trade management, or in managing their running trades. So now we made this video specifically for those traders who have difficulty in managing their trades. So now this is effective geometers. If you haven't subscribed to our channel, I think this is the right time you do subscribe and turn that notification bell on for you to be notified whenever we upload a new video. For the broker we recommend you to use Exness. The link is down in the description. So hit that link down and register with Exness to start your trading journey. Now trade management, a lot of traders make a mistake in trade management by being glued to the screen of their computers as if watching each candle forming will change the direction to which the market is moving. One of the problems, or one of the things we traders we do, is sitting by your screen every time. There's no way you're going to manage your trades by you sitting on your screen every time. Why? By the time you enter your trade, that means you have looked on what we call your trading plan. Your trading plan has all the things for you to follow on a daily basis before you enter a trade. But if you sit down and you monitor your trades from morning to evening, that means there are some mistakes or there are some rules you didn't follow according to your trading plan. One of the things that keeps traders on their screens without moving, going to do other things, is higher leveraging your account, which is using higher lot size. Another thing is you not getting that perfect entry on that particular trade because of you didn't have patience to wait for that trade to mature and you enter, either buy or you sell. So that becomes a habit of you sitting by your screen the whole day, watching every candle forming and closing, which will not turn the movement of the market. So you have to watch your analysis, place your trades, walk away, give it some time, 1 to 2 hours without watching your trades, come back, watch your trades, or you can give it like 3 to 4 hours. You say I'll be watching my trades every after 4-hour close of a candle. Let me hope we're together. Do not do that. The thing you might do is to check for an economic calendar, to check if there is no fundamentals related to the currency pairs that you are willing to trade. And B, we do not check the news to trade them, we check them to position ourselves. So now, we do not check these economic calendars for us to place these trades. No. But we check these economic calendars if there is an event on the exact time you're going to be placing your trade. First, give it some time. Wait for that abnormal volatility to settle. It can take over like 1 to 2 hours. Then you can get a perfect entry on your trade. But do not place your trade on the high volatility of the news. Should it come to be clear, if you saw a setup in 60 minutes charts, you may check your trade after an hour. You do not have to worry watching every tick, which will stress you. With this being said, a stop loss must always be there. You heard me several times saying, I trail my trades. This is what I meant. I set a trailing stop by using the low highs and lower lows. Another approach would be, if you are usually taking like 50 pips, instead of taking it, you must move your stop loss, lock your profits, plus 30 pips to a trade may still give you a profit of perhaps 100 pips. If it hits your stop loss of 30 pips, you must accept that 20 pips a loss that you have already counted as profit. The market will open again tomorrow and give you more than that. One of the way of, let me say, one of the highly recommended ways to use when you are managing your trades is using a trading stop. Now, this trading stop helps you to lock your profits. There are some trades when you enter, it first takes you in a drawdown of over like 20 to 30 pips. There are some trades when you enter, it can take you in profit of over 30 pips. Now, what do you do with your trading stop? Let me say your stop loss is over or below 50 pips. When this trade moves 25 pips, get this stop loss of yours, bring it to break even. Why? Remember, you have just placed this trade, so that means it doesn't even have this commission or spread being deducted from your trade. Now, use this chance of locking your profits. Can be, you can lock like 10 pips or 5 pips. You get it. Now, if you're using like one lot size, that means that will be $50 being locked. But you'll find your target is over 50 pips. Now the trade has already moved 25 pips, you have locked 5 pips. Now, if the trade doesn't go your way to hit the 50 pips profit, even if there are some news being released and automatically comes back to your entry, you will not make any loss, you'll be stopped out and you will find your account is being protected, and you also have walked away with some pips, which is some little bit profit. So now I also have a clear example of what I'm trying to explain. I entered this trade yesterday but one. I trade pure price action, which is patterns. So now I entered this flag from here. This was my entry. So after entering my entry, I had this huge spike. So I decided to, my stop loss was around this area. So I shifted my stop loss to break even and then the trade to run. So this is what we are trying to explain to you, that now it was risk-free trading. Why? Already my stop loss was in profit. So I decided to give in time for the trade to play out and head to my take profit. So now this is one of the ways you can use to manage your trades when you are trading to become a successful trader. Now for those who have actually learned something from this video, I would like to see a lot of comments down the description, and also we recommend you to follow us on our social media platforms. All the links are down the description: TikTok, Instagram, Facebook. We also have a free Telegram channel whereby we give out daily signals to our traders, and we also try to communicate with our community, plus making these live sessions whereby we come every week and we try to analyze the market with you guys. So now, before you head to another video, first check down the description, try to read through about all the links which are being breakdown there. We also have links for the recommended forex brokers. If you are struggling to get a legit forex broker, we recommend you to use Exness. The link is down in the description. If you're focusing on crypto, we also have those links down the description. If you are focusing on which application you can use to deposit your money on several brokers or sending money across borders, you can use Skrill. Also, the link is down in the description. So take some time, read through the description, because we have a lot of links with a lot of valuable information. So our role is to take time, bring legit things on board, and you test them or try to use them. So now that is our role. Now for the role, for us making these videos is also to try to compare this knowledge or share with you our knowledge, and you also try to ask us more questions. Now, in these questions is where we're going to answer you by making more videos. So now comment down in the description what you have learned from this video. We shall get time, read through them, and also answer you through making other videos. So peace out.